Welcome everyone. Hi, my name is Rudolf from BCNL. Today we have another great session of the BCNL webinar series together with the guys from Icoinic Capital. Thomas and Arthur are here today. So before we start, quick notes, please turn off your camera, make sure to mute your mic. You can ask questions in the chat that will be answered at the end of the webinar itself. The event is being recorded and shared afterwards on YouTube, so please let us know if you want to have more information about that. Let me see, the new BCNL website is live, so check it out on bcnl.foundation and make sure to subscribe and register for the Dutch Blockchain Week. To stay fully tuned on updates, you can go to dutchblockchainweek.com. Let me see. Thomas, I'm gonna give you control.
Yeah, that would be great.
Now, let me see.
Yeah,
The stage is yours.
I think it works now. Let me check. Yeah. Hi guys, thank you for joining. We're from Icoinic Capital, digital asset management firm in Amsterdam, based in the Beursplein 5. Let us start with a nice disclaimer for today. Nothing we're saying today is investment advice. Let that be stated for the beginning. Today we want to address several topics, and I think it's great. I think there's already some basic knowledge on blockchains and decentralized finance, so that is a virtue in this space. We want to first introduce what we do at Icoinic Capital. After that, we want to dive into the crypto asset world, what it enables, and provide a frame of reference. We want to provide you an overview of the exponential growth in DeFi, the macro case, and the effect of COVID. And to finish it off, we will end with an overview of Icoinic Capital and its investment funds. I think it should, yes. To kick off, my name is Thomas Francken. I'm head of institutional clients by Icoinic Capital. I have a background in law and business law and finance. And I worked at ING Bank in leverage finance prior to joining Cyber Capital and now Icoinic Capital. My colleague Arthur Stolk, I'm not aware if you're, are you muted or unmuted? You're unmuted. I will introduce you regarding that one.
Yeah, I can talk now. Hi. Thank you, Rudolf, for unmute me. Thank you. So yeah, my name is Arthur. I'm the founder and one of the directors of Icoinic Capital. So welcome to you all. I hope that you will have an interesting evening. And if there are any questions, please ask them in the chat. We will be happily to answer them later on. Thomas.
Thanks for that. Great. Now I can quickly introduce the firm, Cyber Capital. And this year we decided to join forces and, oh, who's touching the slides? Is that still Rudolf in the game?
It was quite difficult to hear you, so please talk clearly in the mic. Yeah.
Is this any better?
Yeah, it's good. It's good. Sure.
Okay. I think it should work like this.
Perfect.
Yes, exactly. Okay. So as a quick background of Icoinic Capital. So we just merged this year. We're very happy with this step as we are now opening up for new clients and really combining the two firms is a great step in also leaving behind the single fund structure and moving in a multi-fund industry. That brings us me to the next point. I think the investment landscape is changing. We have seen an evolving back now. Thank you all for joining. We just started. We just introduced ourselves, Icoinic Capital. We're a digital asset investment firm based in Amsterdam. We will provide you an overview of the digital finance space, decentralized finance, crypto, and especially the macro case. which is now a very interesting topic, especially with COVID. I think for starters, to place the asset class within a more broader field, it's essentially an evolution of the internet. And at first, we will have an internet of information where we can transfer information to each other, but only with copies. The real ownership was never really established, only through an intermediary. What now blockchain such as Bitcoin really conceptually enabled is that there was a distributed system which can now verify ownership from different parties using this system. This enables the Internet of Value as we are seeing now, and we will come to that in later slides. To give you a sort of a graphical presentation and overview of this digital assets which can be transferred and ownership can be transferred with it on these blockchains. This is a small example. So here you see the bottom layer is a decentralized crypto asset blockchain protocol. That can be the Bitcoin protocol, can be the Ethereum protocol, Near protocol, or any other settlement layers in the software stack. It has several attributes such as trustlessness, censorship resistance, immutable, programmable, transparent, and all these different assets can be transferred on top of it. So it can be native crypto assets, but also non-native crypto assets such as real estate, collectibles, music, movies, sports. All these different assets were all very difficult to transfer in a previous world and are now being enabled by this new technology. This is another example for that to really visualize where we can place crypto and decentralized blockchains. I'm losing control again of these slides. I got it back, thank you. So here on the left, just to guide you through this, here on the left we see Web 1, Web 2. We see the current and also the new infrastructure on the right. So currently and in previous internet infrastructure, we have the physical internet infrastructure. On top of that, there are different protocols which are communicating and providing the internet infrastructure for us. On top of that, the legacy businesses and current businesses would generate the most value. That's on the top layer. So you see there Amazon, you see Salesforce, you see Slack. All these huge companies are now generating value only in the application layer, which is the top layer. On the right, we see the same infrastructure on the bottom. So we have the physical internet structure, the TCP/IP internet structures, and on top of that, we see the blockchain decentralized networks. And these networks enable different kinds of transfers, and not just information, but also value, which enables new decentralized applications on top of that, which enables a Web3 environment. Here we see this in the money stack. What this means is this is a very simplified presentation of the current banking system. Keep that in mind. But you see the total money supply, which is the servicing. So you see the central bank layer on the bottom, banking layer above that, and furthermore you see all different financial markets and services being provided through those institutions. Now you also understand why cryptocurrency and crypto assets, digital assets, or decentralized blockchain systems are meeting that much resistance in the current space on a regulatory path, but also from banking institutions, as these systems and technologies are so disruptive that these could really endanger their existence going forward. What we see on the right is essentially the same as on the previous slide, only now we see it fully focused on asset management. The bottom layer, the Ethereum protocol layer, really provides the settlement and security layer. So we can all, the transactions being put on the Ethereum protocol layer are verified and secure. That is a trust that is only being given through the Ethereum blockchain. On top of that, we have the network layer, which could be different assets such as MakerDAO, probably you're all aware of it, or other synthetics, or Aave, all these different cryptocurrencies which function on top of the Ethereum blockchain. What this enables is new application and new financial products, which are then being layer. So this gives you a broad overview of how you can place these systems and how you can place this technology. Furthermore, we want to take you okay, what does this really do? Why does decentralization matter? I think because this is the blockchain knowledge is there, but you just take you quickly through it. Decentralization really lowers the cost of verification, as shown on the left, and lowers the cost of network. What the cost of network essentially means is that the highest cost of current systems and current verticals is that we see that in all different macro and markets, we see new monopolies being designed, and not just because it's evolving like that. It's not because they have a monopolistic advantage, because their technology is so strong that it's really difficult for new players to even have a chance against these incumbents. What decentralized networks enable is that the entry barriers to design new and more competitive products are being lowered, which essentially lowers the cost of network and opens up markets. And as we all know, free market economies essentially generate the best value for all users, or all participants in these economies. For the long term, this generates the most sustainable value instead of monopolies. Let me go to the next slide. So, okay, that all sounds very cute and very nice, but the thing we're now seeing is that in decentralized finance, we're not exactly seeing what's being built. We are seeing different verticals being built, and we see that there is a whole alternative economy being built upon Ethereum blockchain. This is just a grasp of some examples of these assets and protocols that are being built and also being used, which I can show in the next slide. This is all being enabled by smart contract technology. What we see here is more of a broad overview of, okay, it's good to see that there are things being built, but what is the value of the whole industry here? What's the value locked in decentralized finance, so to say? Value locked is a KPI mechanism to measure essentially how much value runs through the Ethereum blockchain and its applications. So you have decentralized exchanges, which allow for value transfer. You can lend, you can borrow, you can do margin trading, and you can even do insurance and all other different kind of asset usage. What we see is also exponential user growth. And exponential growth is something we've learned in the past few months due to COVID. We know how fast this can go. And what we are now seeing is that, especially since March, there were 150K users, and we've seen a 0.56% growth daily, which could take us to 1 million users in 2021 and around 10 million in 2022, which would make it a more substantial market. Here we see this more graphically from Messari. Messari is a research firm in crypto, are doing excellent work. And here we can see that the combined value of all assets being built on Ethereum are actually higher than Ethereum itself. It's surpassing it. We can see this as essentially here as well. Here we see that Ethereum is only being used by Ethereum. And as time progresses, we see that different assets are building and using Ethereum for transferring value. We see the same here, and we see the total value of Ethereum assets is over 100 billion for the first time since 2018, which makes us very positive for its future. Okay, well, what does this all mean for us, especially as an asset management firm? What does this say for us to? Well, we see all these different elements moving together. We see different macro trends. This really means for us a big opportunity to move forward. What we seen in analyzing these cycles, I think everyone is up to date with cycles from cryptocurrency, and especially from Bitcoin, as this is a really new technology. New technologies go hand in hand with boom and bust cycles. There's a lot of speculation, and eventually this technology is not that useful or is not that developed yet. So it goes in a boom and bust until it reaches some kind of equilibrium in a later stage. But we expect boom and bust cycles to continue for the foreseeable future. We now believe that we are in a new cycle, and that is being displayed here. And it's also coming out from our analysis on the data we've gathered from the markets. You see here that we have bull cycle statistics and how long it takes for a bull cycle on a mean and on a median. We now see that we only have 2 times of the market price since the low in March, and the number of days is just 150. It would mean that on average we would have more than double of the amount of the bull market still going, and more multiples that we foresee in the future from an investment point of view. I hope that this is somewhat clear. I can understand it's a lot of information in the 20 minutes, but we're more than happy that this has also been recorded. Okay. What kind of multiples are we looking at is with respect to other assets in other markets. As you can see here on the left, we see that the crypto asset market is still relatively small, and especially since it hasn't seen the adoption we foresee it can have. So that will mean there is for us as a big investment opportunity having exposure to this asset class, especially as you can see that all the assets on the right are not necessarily being replaced by crypto assets or by decentralized systems, but these assets could flow through crypto asset and decentralized systems, essentially increasing the value of the underlying systems. We can also put this into numbers. Okay, we see different trend, currency demonetization, especially in emerging markets. There's a lot of inflation. Think of Argentina or Turkey. These economies, and especially in African countries, they have not really a store of value of their currency, which is really Lebanon even. It's really detrimental to their economic progression, economic incentives, and not even building their own economy. We think that there is a chance that these economies will essentially use cryptocurrencies instead of their own government-backed currencies. It's the same for digital commodities. You have a large market cap for that, and we think that part of this could be run on crypto asset systems. The same for protection of wealth. Cryptocurrencies have the interesting aspect that it can be anonymous and provide for especially wealthy families, family offices, or other institutions a way to protect their assets for seizure from governments, so to say. I see here that Google is messing up our slide, but what you see here is really the effect of cryptocurrencies to a traditional 40-60-40 portfolio. 60-40 means equity bonds. So in a normal investment portfolio, investor would have a 60% allocation to equities and a 40% allocation to bonds, and that has historically been a standard market practice. By adding a small percentage of crypto assets, you can see that the Sharpe ratio is significantly improving, and this also provides for us an interesting environment to be offering these investment products. As you can see in the bottom, financial industry legacy players are really already adopting this market. Cambridge Associates is an investment consultant, backed new exchange in New York. Fidelity Digital Assets, of course, very known. JP Morgan had recently sold their private blockchain to Ethereum and invested in Ethereum itself. And Square has just invested a significant amount of their balance sheet into the Bitcoin blockchain. What is the effect of COVID on the market as a whole, and especially also on COVID itself? What we've seen in the beginning of March, we've seen all assets take a nosedive. It was a risk-off environment, which really meant that risk-on assets, which are also cryptocurrencies, we're seeing a downturn. this was for everyone a really a learning experience, and also a wake-up call that this is not, in this point in time, not the hedge that everyone expected it to be. But we do expect it to be the hedge everyone is looking for if we're going forward. And it is for the several cases I'm now going to outline. What we've seen since the COVID crash is that the government, essentially this is the Federal Reserve, is increasing their government debt at an unprecedented scale. So as you can see here on the timeline below, we have 4 times more government debt now within a few months with respect to the whole aftermath of the great financial crisis in 2008, 2009. This is almost unbelievable to see. And we expect that this will push up asset prices going forward. What's interesting to also understand is that what we're now essentially seeing is that private sector debt is being bought up by governments and government debt, and is also making a change in the Netherlands in the people who are essentially have right to the principal payment from all the debt. So if the debt been bought up by governments, you have essentially a different obligatory party within a debt obligation, which really changes essentially. It has a more political effect on the way economies are developing going forward. And we expect these bailouts to continue, especially since COVID is very hard to grasp in the West. It seems that we're not really designed to cope with these pandemics as the East has been showing, especially China and Singapore. What also has been promised by the Fed is that they're going to double inflation to keep the employment running. So in essence, they will do everything that's in their power to keep the employment up. And really, it's quite a difficult time and really in much ways also a scary point in time, because we're going to see a lot of unemployment if central banks don't step in. So we expect them to do so, especially since it's the most humane thing to do. And they've also, they already confirmed to that. And central banks worldwide are going to ease policies until things go better. And that is not yet to be seen. And they have promised to increase inflation by doing so, which has a positive effect on assets which can not be eased, such as cryptocurrencies, gold, or other capped assets. What has this done to the crypto asset first and traditional assets since the drop? Now we've seen crypto perform phenomenally since it dropped in March. There have been returns, unmeasured in the traditional markets, and it's also been reflected in prices. We've seen that Ethereum, Bitcoin have performed very well. The overall market has also performed very well. And it's also to be expected, gold performed well. And even stocks overperformed and even made new all-time highs on the S&P in the United States. What we do see is that other assets, dollar, corporate bonds, commodities, oil are really lagging. And we expect stocks also to lag, but that will remain as it is for this point in time. For investors, it really gets tricky, because in the end they have several brackets: equities, bonds, alternative assets. Equities is somewhat getting more tense, more difficult. Bonds rates are also only going lower and even going negative, and then you're going to a bracket of alternative assets. Hedge funds already had a beating. Real estates also seems very overvalued, and so the asset classes that remain, crypto assets is the alternative asset class that it's providing the multiples and has the attributes for an environment like this that could go up in value. And cash is trash, as Ray Dalio said it. So you should keep out of cash for the foreseeable future as inflation is going up. Let me check. So now I think we went through a couple of big topics, complex topics, interesting topics. And we think that we have built some sophisticated investment funds that really provide investor exposure to this asset class in a meaningful way and on a way that also we feel comfortable with. Maybe, I think, Arthur, would you like to dive deeper into the funds we have built and we're now providing to our clients?
Yeah, sure. I think that you are the pro in the investment fund A, and I think that I'm still the pro in the algorithmic fund. So let's switch also to that.
Yeah,
so thank
sure.
you, Thomas, first of all, for giving a really good presentation about current market conditions across markets, about the value of money, of course, and how we view the current state of the market. So thank you for that. I will start with the Icoinic Algorithmic Fund. It's a multi-strategy fund. Let's start with that. We don't trade leverage. I think that's really important to know. We do mostly spot trading. We have multiple strategies in place. We do a little bit of arbitrage, a little bit of market making, we do some directional strategies. So yeah, it's a mix of strategies. And as you can see, or if you have reviewed us, it pays out since 3 years already. Since 2018, we were profitable. So since inception. What we do is mostly high frequency trading in cryptocurrency. Last year, we had a complete turnover of 1.4 billion USD across exchanges. So we can compare us with the top of the world in that regard. If you look at the risk profile, it's always high. That's something that if you invest in cryptocurrencies, it's just a high risk environment. But we try to mitigate the risk as big as possible. Like Thomas mentioned, the Sharpe ratio is really important. As you can see, we have a high Sharpe ratio, so that's good for investors. And I think the composition is also really important. So what do you invest in? Well, roughly 40% now of the portfolio is Bitcoin. Roughly 20% is fiat currency, USD and Euro. And why is that? We need to trade against those currencies for the markets. We see a big portion also of Ethereum, and then we have a lot of top 20 coins still in it, and some really small portions of some exotics, as we call it, but they're all top 100 coins, and they're traded on the bigger and established exchanges. I think it's also important to give the message that we are fully audited as a fund. So not only we have an annual statement of the auditor, but we get audited every quarter. Sorry, not audited, but there is an agreed upon procedures. So what does the auditor do? They check if the calculation, the NAV calculation that we do is correct. They check if the client movements that we have done are correct, and that the assets that we say that we have are on the exchanges. So they come here, and now it's through video, and they check with us if the coins are there that we communicate with them. So if you want to be in a safe environment, I think that we as an investment group at Icoinic Capital, we have all the tools you can or that you want to see as an investor. We have them on board. Thomas, I want to give you the word for Fund A.
Yeah, thank you very much. Well, great explanation. Yeah, Fund A, it's different than the algorithmic fund. Algorithmic fund is more quantitative based. The value investing fund is really analyzing all crypto assets. We have a research team for that, who dives into the market, lives into it 24/7, and provides the only high conviction assets to really deep fundamental research on why a cryptocurrency is interesting. They have all different measurements for that, quantitative metrics, but also fundamental metrics. And they try to diversify across ecosystems and rebalance monthly, and essentially providing a vehicle for providing you the best exposure to the best possible cryptocurrencies at all times. So it's more of a long-term pension fund than a high because it has high swings, which is also reflected in the risk, but also reflected in the return. Minimum investment period of 3 to 5 years, but 10+ years recommended. And it's for both funds. If you want to have exposure to this asset class, you should do it for the long term and not a quick buck. What I will focus on now, of course, the most funny, interesting part is the performance. Yeah, you can see it yourself. We've performed well. We're proud of that. It has cryptocurrency numbers, especially in Fund A. Algorithmic fund also performed very well, especially during the bear market in 2018. You had a positive return in the last quarter. And it's really showing the quality of the algo. Yeah, I will not bore you too much with these numbers, and probably we can go over them and maybe some questions after this. We've won some awards for fund management this year and last year, and we aim to win again this year. Here you see a graphical representation of the funds, so the performance, and you should really see how it overperforms its benchmarks for both funds. Benchmarks are the Bitwise 100, that is more of a global market benchmark, and it's important that we keep overperforming that. Otherwise, you could just buy an index and be fine. But our added value is really in the picks we make and the algorithmic strategies we have. As Arthur already mentioned, yeah, we work with different strategic partners. We have a fund administrator, IQEQ, prime brokerage, and OTC, that's Bitcoin Suisse, and we have a fund auditor, London and Van Holland. Furthermore, we custody our own assets, institutional grade custodian, and we have EFMD light registration provided by the AFM and the central bank. The team consists of several people. So we have a board of directors, we have a supervisory board. We're very happy with the team. Here's business development, head of research, office managers, and of course, our most proudest assets are our fund managers. On the left, you see the fund managers for Fund A, for the value investing fund, and on the right, you see the algo really designers and really engineers in that matter. I think we are at the end of our presentation. I can expect it was a lot within 36 minutes. But feel free to ask any questions. I hope you had some more insights in what cryptocurrencies essentially are, without all the talks of scams or criminal behavior. Or essentially, it's a very interesting new technology which we expect to develop at an exponential scale going forward. Feel free to ask any question. Happy to answer.
So thank you, guys. Amazing ride, I think. So, well, I learned a lot, I can say, and I think you're in the right direction. I'm in the meantime checking the chat box. I don't see any questions coming in, which usually means it was a clear message, I guess. Maybe there's anything else as a final note that you would like to add. A news flash, something you have as a vision. It's totally up to you.
Well, I think that's what Thomas stated, and he commented, or he quoted Ray Dalio, cash is trash. Sometimes we say in the office, we don't buy Bitcoin, we sell euros.
I see we have a question.
From Red. Yeah, so Red asks how we are compared to Bitcoin, and I think we can pick the year to date of Bitcoin and our funds. So if you have invested in Bitcoin, roughly, if I said correctly, do we have the exact numbers in the presentation?
Yeah, we have.
Yeah.
We also have here, you see the graphs.
Yeah.
The yellow line is the Bitcoin line, but Arthur, yeah, please.
Yeah, so I thought that Bitcoin is up 43% year to date, and well, the Fund A is up, Thomas, 163%.
Yeah, something like in that ballpark. Yeah.
Yeah, and we are up 140%. So compared to Bitcoin, we did way better.
Yeah, it indicates that we're also seeing that Bitcoin dominance is going down in the market, and that is all over the past 10 years, which indicates that altcoins are good. If you can find the real gems in the altcoin market, you will overperform Bitcoin as its dominance is going down.
Yeah,
which is also now reflected in the performance. Yeah.
Yeah. Any other questions?
Well, I have a question actually. So
Yes,
how do you compare the Dutch environment compared to other, let's say, European levels, but also compared to Asia and the US?
Very good question. Arthur, I would like to add something, but Arthur, I think you should also want to answer.
Well, the question for me is not that clear. The environment you're referring to, crypto environment or investing environment?
In terms of regulation.
In terms of regulation, well, I think the Dutch, the Netherlands, is truly hard on regulation, and I think that's a good sign because it means that the markets are taken seriously by our government, and also it will mature the markets more, and it will create comfort for future investors to invest in these markets because we get rules and laws regarding that. So, and if you look to Europe as a continent, and especially the European Union, we now have seen a leaked document, and that's called MiCA, Markets in Crypto Assets. And what you can read in there is that they're going to regulate crypto assets. So for example, if you want to do an ICO, there will be rules. So if you're going to write a white paper, there are rules to write the white paper. If you're going to create a stable coin or you want to trade a stable coin, there will be rules in place. So feel free to Google it, MiCA, M-I-C-A, and you will find the document is 150 pages long, so it's a pretty tough read, but all the info is there, and it's pretty interesting.
Well, when will it be in effect, you think?
Yeah, it's a leaked document, but there was already a draft date on it, and that's I think next year it will be. I don't know if it's being implemented yet next year, but I think it will be presented to all members of the European Commission, and then they need to take a decision on that. But it will be sooner than later.
Yeah, and that's more in with respect to central bank digital currencies as well. They need to make clarity in these markets. And if I may add to that, I also see another investor appetite in the European market, especially Switzerland, Italy. Germany is somewhat getting more comfortable, especially since the launch of their ETN, an exchange traded product on their beurs. The UK market is rich, and the Dutch market is getting more comfortable. We're seeing some family offices. Family offices are more active in Switzerland, in Italy, and the US market is really way ahead in terms of capital, but it's also to be expected. It's a more risk-taking environment, so to say.
Cool. Well, that answers my question. Well, I think we had a good ride here. I think I'm going to thank you a lot for all the information. Really some insights for me personally, and I hope for our viewers as well. So